What is going on? Welcome back to the channel. We got Lucid earnings here. So earnings starts in roughly 10 minutes. I'm gonna kind of give you the Cole's notes from their earnings, and then we'll kind of listen to them speak. I'll give you my thoughts afterwards. But getting right to it though, as far as documentation, they submitted their earnings, so a PR and a 8K and a 10Q. And so there was no other documentation, so it is fair to assume, based on what is stated here, there is no new partnerships. So I think for face value, I'm kind of disappointed. So estimates were 262.64 million, came in roughly at, I think it was right over here, 259. So they missed on revenue, missed on earnings per share. They lowered their guidance, and this is where I guess some people are debating whether they actually did lower it, but they did revise their guidance to 18 to 20,000. And for those of you that were around back in 2023, this is the exact same thing that they did before they lowered it in Q3 again. So potentially that might be something that comes down the pipeline, but even based on a lot of the revisions on their kind of document right here, it shows things aren't going well. So them lowering their guidance on their capex shows things are slowing. I don't know. I really wish, there's so many things to talk about right here, and I kind of wish I had positives to bring up, but honestly, I think just this quarter is a write-off. I think they just need to pull it off like a band-aid. Listen to Mark rant, try to sell us on what they've been doing. But honestly, my viewpoint now on Mark is definitely tainted. I know leading into kind of the whole Mark stage, we had Peter. He stuttered a lot, but he was passionate about the technology. Now we pretty much don't know when Mark's lying because Peter always stuttered, so you can kind of tell when he was lying. Now Mark hyped up on Bloomberg that there was people and investors would be pleasantly surprised, and that alluded to like a partnership. We got nothing. And for those of you that kind of think that, hey, maybe they might say something during the earnings, they won't, because if so, they would put out an 8K about that. And plus, they would actually bring that up in their presentation. So there is no new partnerships. Uber was that big deal. Which is, again, rather unfortunate. You can kind of even look at this right here. This is Mark's words in regards to the partnership. And yeah, that's it. So coming from a investor standpoint, they are burning a lot more cash. They are signaling that things are slowing. For those of you that have watched my kind of channel since Financial Journey, I've been fairly accurate on the time frame when they need money, and they will need money in Q4. So dilution count right around the corner. They don't bring up reverse stock split at all. And this has kind of been my issue about Lucid, is that to do a reverse stock split to incentivize institutions to buy, that doesn't make sense. If an institution really wanted to buy your stock, like, they would find a way to do that. But nobody's going to want to buy like a flopped company, and so far that's what this earnings is. So it's just rather unfortunate. I know a lot of investors have been really hoping for kind of a final change where things will start to move on higher, but I think just we need I don't know. So yeah, for face value, they did revise their guidance. They also did lower the capex, missed on revenue, earnings per share. We have these questions to look forward to from retail. So is there going to be a reverse stock split? I guess we'll find out or see what the wording is on that. Where is Lucid projected to be in 5 years? So that'll be a interesting kind of answer from them. Nothing of which will add any utility in my opinion. Adrian, how will the partnership with Uber aid in the company's growth? How big of an impact do you think it'll have? So yeah, long story short, there won't really be much from there. Yeah, even looking at their actual earnings right here, they diluted a ton. So just kind of within the same time frame from 2024 to 2025, they diluted roughly around 750 million shares. So that goes to show exactly the magnitude that is that they're burning through a lot of cash. And yeah, so it's really an unfortunate scenario, and the whole reverse stock split is going to reset the actual it'll keep the authorized shares the same, so that's going to stay at 15 billion. But yeah, the outstanding shares, everything is going to get really screwed. So I wish I had really good news to share with you, but I think this is another bad earnings, regrettably. So in case you don't know about the reverse stock split, that whole shareholder meeting is going to be occurring on August the 18th. You can kind of tell that Lucid is trying to be strategic because they don't bring that up whatsoever, and like zero. This is something they do not want to talk about. And this is why I know that Mark is lying, because technically if it was for the betterment of the company, like if I was CEO and if I was doing something that was kind of debatable, but I think it was a good kind of scenario, I'd say, hey, this is why I want to do a reverse stock split. But they don't mention it. So they are trying to hide it. And this is why they slid it in under the whole Uber deal. So some of you might be wondering, and did ask comments in previous videos, why did they put out the whole reverse stock split news at the same time as Uber? And that is simply because they wanted to hide it. They wanted the Uber news to foreshadow and kind of people not pay attention to the reverse stock split. But that's all that analysts cared about. That's all that, for those of you that have invested in some speculative stocks, there's quite a few that have done numerous reverse stock splits, and shareholder equity goes down. So even today, shorts did increase 14.47 million shares. So I think in reality, the only ones making money are shorts. And whether they are trying to take down Lucid because of the PIF or maybe because of some other external point that I'm not really aware of, like in reality, shorts are really hell-bent on bringing Lucid down. And plus, at the end of the day, when there is a reverse stock split kind of looming, like shorts love that. So in my opinion, anyone saying that there's going to be a potential short squeeze because of a reverse stock split, be very cautious. I do have the actual ticker going at the top right over here, and so you can kind of see any changes. So as Mark or whoever is speaking, you kind of see some changes, but ultimately I don't really see anything possible for them to actually say during the earnings call that will be able to reverse it, because they just pretty much follow this script. So I've already looked at their presentation. There's not really anything. They'll kind of talk about their 5-year, their plan ultimately. But yeah, this is pretty much it, in my opinion. So I'll take a look at the chat. Kumar, looks like Cal just started a huge short position the way he's bashing. No, you must be new to the channel. I always give you like the good, the bad, and the ugly. I don't really care about, like, when I'm doing my videos, that is completely separate from my investing. So I always want to give you the most honest opinion possible ever. I've never shorted Lucid, and nor will I ever short Lucid, because I honestly do like the company. Company is very poorly managed, and this is a good representation of that. This is a copy and paste of previous earnings. So yeah, clearly at the same time though, with it down 6.61%, anyone saying that this is positive is, in my opinion, a pumper. I don't see anything positive about this, and a lot of signs within their actual guidance shows that things are slowing for them. But then again, at the same time, a lot of those same cracks kind of started to show in Tesla as well. So it's not just Lucid itself, but at least Tesla has a big float, and they can technically survive that way. Lucid is going to survive by dilution up until profitability. And for those of you, on a side note, that was, or at least were really wanting the midsize to be out earlier, they're still sticking to late 2026. So despite the Nikola facility, that won't speed things up. So that answers this one right here. So is the midsize platform still on track for late 2026? Are deliveries expected to start in 2026 or 2027? Did the acquisition of the Nikola facilities allow midsize to be brought forward at all? So answer to that is no. Earnings will be starting in a minute. So once it does start, I will mute myself, and then we'll kind of listen in, and then depending on kind of what is said afterwards, I'll give you my thoughts on that to see if anything does change. But yeah, for right now, we just listen and wait. Last couple of ones, I think under Mark, they've actually always started late, on a side note. Fabian, no, hasn't started yet. Now it has.
Ladies and gentlemen, thank you for standing by, and welcome to the Lucid Group second quarter 2025 earnings conference call. Please be advised that today's conference is being recorded. Later, we will conduct a question and answer session. If you have a question, please press star 11 on your touchtone telephone. I would now like to turn the conference over to your speaker for today, Nick Twork, Vice President of Communications. Please go ahead.
Thank you, and welcome to Lucid Group's second quarter 2025 earnings call. Joining me today are Mark Winterhoff, our interim CEO, and 𝗪𝗪𝗡𝗘𝗖𝗧, our CFO. Before handing the call over to Mark, let me remind you that some of the statements on this call include forward-looking statements under federal securities law. These include, without limitation, statements regarding the future financial performance of the company, production and delivery volumes, vehicles and products, studios and service networks, financial and operating outlook and guidance, macroeconomic, policy and industry trends, tariffs and trade policy, company initiatives, and other future events. These statements are based on various assumptions, whether or not identified in this communication, and on the predications and expectations of our management as of today. Actual events or results are difficult or impossible to predict and may differ due to a number of risks and uncertainties. We refer you to the cautionary language and the risk factors in our annual report on Form 10-K for the year ended December 31, 2024, subsequent quarterly reports on Form 10-Q, current reports on Form 8-K, and other SEC filings, and the forward-looking statements on page 2 of our quarterly earnings presentation available on the Investor Relations section of our website at ir.lucidmotors.com. We undertake no obligation to revise or update publicly any forward-looking statement for any reason, except as required by law. In addition, management will make reference to non-GAAP financial measures during this call. A discussion of why we use non-GAAP financial measures and information regarding reconciliation of our GAAP versus non-GAAP results is available in our earnings press release issued earlier this afternoon, as well as in the earnings presentation. With that, I'd like to turn the call over to Lucid's interim CEO, Mark Winterhoff. Mark, please go ahead.
Thank you, Nick, and thank you everyone for joining us in our second quarter 2025 earnings call. I'd like to begin by expressing my sincere appreciation to our employees, customers, partners, and shareholders. Your continued belief in our mission is what drives us forward every day. In the second quarter of 2025, we achieved meaningful progress on both operational and strategic fronts. We delivered 3,309 vehicles, up 38% year-over-year, and our sixth consecutive quarter of record deliveries. We produced 3,863 vehicles, up 83% year-over-year. As expected, ASP increased sequentially this quarter due to improved mix. However, gross margin was negatively impacted by tariffs, as Taoufiq will detail in his remarks. First, we've been sharing with you that we are in active discussions about partnerships beyond selling or licensing our industry-leading EV technology. On July 17th, we took a big step in this direction with the announcement of a partnership with Uber and Nuro on a next-generation premium robotaxi created specifically for the use on Uber's ride-hailing platform. This partnership combines the industry-leading software-defined vehicle architecture of the Lucid Gravity, the scalability and proven capability of the Nuro Driver Level 4 autonomy system, and Uber's vast global network and dynamic fleet management, delivering a fully integrated robotaxi experience developed for comfort, safety, and scale. Our industry-leading efficiency and technology, like our AV-capable sensor suite, redundant steering and braking systems, and highly efficient, compact, and high-power density motors, help maximize uptime, and reduce operating costs per mile. Key success factors in a successful robotaxi program. The Lucid Gravity software-defined architecture makes it the ideal platform for third-party autonomy stacks. As part of the agreement, Uber will invest $300 million in Lucid, subject to regulatory review. Uber plans to deploy a minimum of 20,000 Lucid Gravity vehicles equipped with the NeuroDriver over 6 years in dozens of markets around the world, with the first vehicles launching late next year. This is an important step for Lucid into the multi-trillion-dollar robotaxi market, but it's only the first step. And while we are working with external partners on this initiative, we continue developing our internal ADAS and AD capabilities, such as our recently announced hands-free driving software update, with more improvements to be announced. We're also leveraging our partnership with the King Abdullah University of Science and Technology, or KAUST, to train our AI models for ADAS and AD and bring cutting-edge innovation from the lab to the road. I've been clear about our intention to monetize Lucid's technology through licensing deals or strategic partnerships. And this announcement signals our right to win in new markets. Uber's investment in Lucid is yet another example of a third party validating our highly advanced technical platform, and we remain in active discussions with other potential partners. Second, we followed through on our commitment to drive awareness for our products and the Lucid brand last week when we announced 𝗪𝗓𝗓𝗏 Chalamet as Lucid's first ever global brand ambassador. Chalamet will be featured in a new campaign promoting Lucid Gravity that marks another significant milestone in our commitment to raise brand awareness. This first campaign of the partnership will launch in early September. In addition to stimulating near-term demand, this multi-year partnership with 𝗪𝗓𝗓𝗏 is designed to anchor the Lucid brand in popular culture ahead of our entry into the mass market with our midsize vehicles. Now, let me take a moment to go in depth to explain how these initiatives fit into our mission to not just deliver the best car in the world, but also the best business. Since we started our respective roles, Taoufiq and I have dedicated time to aligning our priorities for the business. We are laser focused on 3 important near-term priorities for Lucid. These are: first, operational discipline; second, building a distinctive, scalable brand; and third, maintaining and enhancing a sustainable edge through our technology. Operational discipline relates to manufacturing, cost control, and practically every element of the business. As we communicated in our press release, our target is to produce 18,000 to 20,000 total vehicles in 2025, and as of the second quarter, we have produced just over 6,000. On this topic, I feel that it is important to acknowledge that we are not where we want to be with Lucid Gravity production relative to our target at this point in the year. However, our team has been working very hard all year to address bottlenecks in our supply chain and improve manufacturing efficiency. I'm happy to say that we have overcome most of these issues and are beginning to ramp up Lucid Gravity production. We believe we will significantly increase production in the second half of the year. The challenges we faced were multifold, but can primarily be attributed to, first, the capacity of certain suppliers in our supply chain, and second, the availability of magnets originating in China, an industry-wide challenge. To the first point, we've been working closely with our suppliers to alleviate issues that could prevent us from producing at the necessary volume to achieve our targets in the second half of the year. We've also implemented key initiatives that are focused on fostering enhanced accountability and data-driven decision-making. We are already seeing the benefits of this as we work diligently to improve Lucid Gravity production. Turning to the second point, to mitigate geopolitical supply chain challenges, our team was able to quickly integrate substitute magnets in production. And because of our nimble in-house vertical integration, this process took weeks instead of months. Software changes, manufacturing changes, and software-hardware integration all work together to make this happen. Without our vertical integration and ability for our team to make quick changes, we would have stopped production in Q2. I'm happy to say that we believe this issue is behind us, and we have secured enough magnets to meet our production target for the remainder of the year. As we have noted before, we have a strong commitment to our US-based manufacturing. We believe this will make us more resilient and help mitigate the impact of tariffs and other geopolitical issues. In that regard, I wanted to highlight a couple of recent announcements that further support our position. First, in June, we announced a preliminary agreement with Graphite One to source natural and synthetic graphite domestically, beginning in 2028. This agreement complements our existing non-binding supply agreement with Graphite One that was signed in April of 2024. Following this announcement, we helped establish the Minerals for National Automotive Competitiveness Collaboration, or MINAC, a partnership among US critical minerals producers that are focused on supporting US-based manufacturing and sourcing. We view these as necessary corrective steps to help insulate our supply chain from global volatility. We also recently celebrated the opening of Panasonic's US factory in DeSoto, Kansas. Panasonic is one of our key suppliers, and the presence of this US factory will strengthen our domestic supply chain starting in 2026. Our next priority is to amplify demand through brand, marketing, and partnership initiatives. Our team's hard work in this regard has been on display through recent announcements over the past few weeks that I've already discussed. I'm pleased with the progress we are making to enhance our brand, but this work is only the beginning. As I mentioned earlier in my remarks, in September, we plan to launch a new Gravity brand campaign featuring 𝗪𝗓𝗓 𝗪𝗓 as part of our broader partnership. To further deepen brand affinity and trust, we are expanding our efforts beyond traditional advertising. This includes new brand ambassador partnerships with world-class athletes, influential cultural voices, and globally recognized creators who share our vision and values. We are also developing strategic collaborations with brands and organizations at the forefront of sport and culture. These partnerships will allow us to tap in new communities and strengthen emotional connection consumers have with our brand. Regarding the scalability of our brand, many new customers are now experiencing Lucid Gravity in our studios, and we're seeing a high order conversion rate for prospective customers once they experience the vehicle. In fact, our daily order rate has nearly doubled since display and test drive vehicles have been widely delivered to studios. Our final priority is to maintain and enhance our competitive edge through our technology. Engineering and technological excellence have long defined Lucid's brand, and we remain committed to these tenets as we grow the business. Just a few days ago, we deployed a software update to our DreamDrive Pro advanced driver assist system. This update enables hands-free driving and lane changes, and is also expected to be released for Lucid Gravity later this year. Recently, we also began production of the 2026 Lucid Air, which features a new battery pack for touring models that extends the model's EPA-rated range to 431 miles, compared to 406 in the previous model year. Notably, all 2026 Lucid Air models now utilize the same AC compressor as the Lucid Gravity, marking the beginning of further efforts aimed at part commonization across our vehicle lines. The Lucid Air Grand Touring demonstrates its range leadership recently by garnering the Guinness World Record of the longest journey by an electrical vehicle on a single charge. Additionally, Car and Driver named the Lucid Air Sapphire the quickest car they've ever tested, toppling the Porsche Taycan Turbo GT 𝗖𝗧. The Air Sapphire set a 0 to 60 time of 1.9 seconds and completed the quarter mile in 9.1 seconds. In 𝗖𝗎𝗓 ultimate drag race on Agility, the Lucid Gravity Dream Edition with dual motors completed the quarter mile in 10.5 seconds, matching the quad-motor Rivian R1S. But where the Lucid Gravity truly stood out was in acceleration beyond 60 miles per hour, showcasing the superior passing power and highway merging confidence that define Lucid performance. The same Lucid Gravity Dream Edition can also reach 150 miles per hour faster than a Corvette Z06, according to Car and Driver. At the beginning of my remarks, I highlighted our recent partnership with Uber and Nuro, which showcases and validates that the advanced capabilities of Lucid Gravity provide an ideal platform on which to integrate AD technology. Looking ahead, our midsize platform vehicles will play a crucial role in maintaining Lucid's competitive edge in technology. These vehicles will have been meticulously designed to achieve leading product features and specifications with low cost, enabling us to position our company for significant market expansion. By adopting this approach, we aim to strike a balance between cost competitiveness and high volume production, while still preserving the premium attributes that our customers have come to expect from Lucid. Technology leadership is the key enabler for this previously opposing combination. A prime example of this approach is our Atlas Drive unit, which serves as a cornerstone of our higher volume and cost efficiency strategy. We are committed to enhancing our powertrain efficiency leadership, while simultaneously achieving lower costs and maintaining exceptional performance. Lastly, as you may know, the Lucid Gravity was the first non-Tesla vehicle sold to offer a built-in NACS connector and supports native Tesla supercharger network access. We have also recently opened this access for Lucid Air owners as well. As of July 31st, Lucid Air owners with an approved adapter in North America can now charge their vehicles at any one of the 23,500 plus Tesla supercharger locations throughout the country, with access integrated into their Lucid app. This is in addition to more than 30,000 CCS chargers already available across North America to Lucid drivers. In closing, we are not simply building electrical vehicles. We are pushing the boundaries of what EVs can be. From the record-breaking performance and efficiency of the Lucid Air, to the game-changing Lucid Gravity, to our upcoming midsize platform, our technology continues to redefine what's possible. But our mission isn't only to make the best EVs in the world. It's to build a great business around them. That means continuing to drive innovation while also scaling intelligently, building a robust supply chain, and making strategic decisions that position us for long-term success. We're entering a pivotal new phase, one where world-class engineering meets world-class execution. And with the talent, focus, and drive across our team, I truly believe we're just getting started. Thank you for your continued belief in Lucid, not just as a car company, but as a company shaping the future of mobility and American manufacturing.
Thank you, Mark, and thank you to those who are joining us today. I'd like to build on Mark's comment by sharing more details about our operational and financial performance this quarter. I will also provide clarity on the strategic steps we're taking to position Lucid for the long-term success. In the last few months, our focus has been on execution, turning strategic commitments into measurable progress across production, cost discipline, and financial resilience. We have also taken meaningful steps to strengthen our capital structure and accelerate monetization of our technology. One of our most significant recent developments was our agreement with Uber and Nuro, which represents far more than a commercial transaction. It is a strategic alignment with two leading players in mobility and autonomy who choose Lucid Gravity as the core platform for the next generation robotaxi. Uber's planned $300 million investment in Lucid, subject to regulatory approval, will directly support the development and integration of this program. It reflects external confidence in our underlying architecture and is a validation of the broader platform opportunity we see beyond direct-to-consumer sales. It also confirms our ability to create scalable enterprise value by deploying our technology in new verticals, fleet, autonomy, and AI mobility. In parallel, we announced our intention to implement a 1-for-10 reverse stock split. This is not a cosmetic action. It is a deliberate and targeted measure to ensure Lucid's equity remains accessible to a broader universe of long-only institutional investors. It also aligns our share price with the strategic trajectory of the company as we move into the next chapter of scaling our operations and deepening our capital markets engagement. The reverse split is expected to take effect in early September, subject to shareholder approval. Turning now to the numbers. We have delivered $259 million in revenue in Q2, marking a 29% increase year-over-year. We produced 3,863 vehicles, and deliveries reached 3,309 units, up 38% compared to the same quarter last year. This marks our sixth consecutive quarter of record deliveries. Despite the ongoing challenges facing the EV sector, particularly in supply chain, we maintained positive momentum and continued progressing towards our volume targets. Given the continuously shifting market environment, we have decided to provide our production guidance as a range. Gross margin for the quarter was negative 105%, reflecting a $54 million impact from tariffs alone. This impact accounted for a 21 percentage point decrease in gross margin, offsetting the benefits from sequential improvements in ASP. While we anticipated this pressure, we're actively taking decisive actions to move margins back towards a positive trajectory. These actions include material cost optimization, improving production efficiency, and tighter inventory management. We also saw continued cost discipline across the organization while maintaining targeted investment in product and brand. R&D totaled $274 million for the quarter, reflecting higher spend on the midsize platform and Atlas powertrain. SG&A was $257 million, a sequential increase as spend normalized following a one-time reversal of previously recognized stock-based compensation expense in the first quarter. Importantly, we are continuing to make deliberate trade-offs across the business, investing where it matters and streamlining where appropriate. Adjusted EBITDA was negative $632 million, down 12%, driven mainly by gross margin pressure. We ended the quarter with $3.6 billion in cash and investments and total liquidity of $4.86 billion. Our financial position remains strong, providing us the runway to fund operations and execute our long-term plans. CapEx totaled $183 million, consistent with our guidance, and inventory rose to $713 million, reflecting Lucid Gravity production builds and preparations for ramp-up. Looking forward, we are navigating an environment that remains volatile and uneven. We flagged earlier this year the potential impact of tariff-related margin headwinds in the range of 8 to 15%. Based on what we know today and the mitigations we have already activated, including the localized sourcing, engineering substitutions, and vertical integration, we now believe the actual impact will fall at the lower end of that range. We are also continuing to manage exposure to magnet supply risk through a combination of supplier diversification and in-house reengineering. The lessons learned during the Lucid Gravity ramp are informing our decisions as we prepare for the start of mid-size production in late 2026. On the policy front, most of you are aware of the $7,500 EV lease credit will be eliminated beginning in Q4 of this year. We have defined countermeasures that will be implemented in Q3 to address this change. This next phase of our strategy will require us to scale with precision. The mid-size platform represents a critical opportunity to expand Lucid's addressable market, enhance manufacturing leverage, and offer a broader value proposition to customers without compromising on performance and efficiency. We are applying everything we've learned from the Lucid Gravity to ensure this program comes to market with greater agility, lower unit cost, and shorter lead times. Lastly, we are updating our annual production guidance to a range of 18,000 to 20,000 vehicles. Going forward, we will provide production guidance as a range to reflect the potential impact of continuously changing market environment and external factors. We are refining our 2025 CapEx guidance to a range of $1.1 billion to $1.2 billion. This adjustment reflects a more focused investment approach, prioritizing critical programs with the highest near-term return and long-term strategic value, and deprioritizing lower return investments. We remain committed to funding future growth, and all other operational and strategic targets remain unchanged. Let me close with this. At Lucid, we are committed to building a great company, not just a great product. That means scaling responsibly, investing wisely, and staying laser-focused on the fundamentals: quality, cost, and capital discipline. We are operating in one of the most dynamic and competitive industries of our time. What will distinguish the winners from the rest is not ambition alone, but execution. And execution is what we are committed to. Thank you for your continued belief in our mission. And with that, I turn it back to Nick to open the line for questions.
Thanks, Taoufiq. We'll now start the Q&A portion of the call. Before we take questions from those on the phone, I want to pose the questions that our retail investors sent in through the 𝗖𝗓 technology platform. The first question comes from Sean B. How many current Gravity orders are there?
We don't disclose the specific number of orders we've received. However, as I referenced in my prepared remarks, customers are now experiencing Lucid Gravity in our studios, and we are seeing a high conversion rate once people see the vehicle for themselves. We are happy with what we're seeing, and we remain supply constrained and not demand constrained. We expect the situation will normalize soon.
Our second question comes from Paul C. Is the midsize platform still on target for production in late 2026? Are deliveries expected to start in 2026 or 2027? And did the acquisition of the Nikola facilities allow midsize to be brought forward at all?
The midsize is still scheduled for start of production in late 2026, and we are planning to unveil the vehicle next year. Given that production starts in late 2026, we expect deliveries to ramp up throughout 2027. Regarding the Nikola facilities, while the facilities we acquired bring added capabilities, they will not impact the timeline of our midsize vehicles.
Our third question comes from Adrian D. How will the partnership with Uber aid in company growth, and how big of an impact do you expect it to have?
The strategic partnership with Uber and Nuro is our entry into a large and very attractive market. As far as impact, partnering with companies like Uber and Nuro is another data point that validates Lucid's highly scalable platform and signals our right to win in new markets as we continue to pursue additional partnerships. This is the start of our path to extend our innovation and technology leadership into this multi-trillion-dollar market.
Now we'd like to take questions from the phone lines. Operator?
Thank you. As a reminder, to ask a question, please press star 11 on your telephone and wait for your name to be announced. To withdraw your question, press star 11 again. One moment while we compile the Q&A roster. And our first question will come from the line of Andres Sheppard with Cantor Fitzgerald. Your line is open.
Hey, everyone. Good afternoon, and thank you so much for taking our questions. Congratulations on the quarter. Hey, just a quick question on ASPs. Just given the macro environment, should we be expecting any changes to the midsize initial ASPs as they ramp up? Thanks.
Midsize ASPs ramp up, I think that is still some time out. Are you referring to Gravity?
No, just on the midsize. I know we're not there yet, but just curious if, as the macro worsens, if you're expecting any changes to initial ASPs once it's available.
No. No, I mean, there's no plan and no expectation that the ASP of the midsize will be impacted. As a matter of fact, I mean, we have the current situation. I personally and we as a company see this also as a temporary phase where we had a big hype on EVs a couple of years ago, and now there's more a slowdown. But we are fully convinced that EVs is the way forward, and this will normalize over the next years.
Got it. That's very helpful. Thank you. And just as a follow-up, maybe for Taoufiq, can you just remind us the plans regarding the 2026 convertible that's coming up? Like, remind us how you're planning on addressing, I think, the remaining $900 million or so that's left. Thanks.
Yeah. Hi, Andres. So, I mean, the plan is still, I think we touched quickly on it last time we spoke. I mean, the plan is still to go to the market in the next coming quarters. So, I mean, there's no change to that. So, obviously, we're carefully monitoring the market situation in order to take advantage of the best conditions. So, but it's something that for the moment we're planning for towards the end of 2025, early 2026.
Wonderful. Thank you so much. Congrats again. I'll pass it on.
Thank you, Andres.
One moment for our next question. And that will come from the line of Stephen Gengaro with Stifel. Your line is open. Mr. Gengaro, if you're on mute, please unmute your line.
Okay, sorry about that. I hit mute by mistake. Thanks for taking the questions. What I would like to start with, if you don't mind, is can you talk about the approach, the current approach, and if it's changed to licensing agreements and kind of what you see the potential there for over the next couple of years?
Yeah. I mean, actually, the comment on that one would not change or has not changed compared to what I said 3 months ago, because we have still ongoing discussions on that topic. Most of the other OEMs we are talking to, they have other problems right now. I mean, they're still very much focused on grappling with the tariff effect and those kind of things. And so those discussions are still happening. They're just progressing slower. And we still see the potential in those deals. But as I said, the last time.
Would you like that?
No, thanks.
No. Okay, just wait.
Background noise there. But we also have now discussions on partnerships beyond this topic. And, this is the Nuro and Uber deal is one example of that. And that's now what we are expecting to come to fruition more in the future as well.
Great. Thank you. And I apologize for that background noise. The other question, just the update on how the new Atlas powertrain is coming, and sort of your confidence in the development of that and the efficiency of that product versus kind of, because you're just so well known for how efficient the motor systems are. So just curious where things stand there.
Yeah, on track. I mean, to say it short, because obviously this is our next generation powertrain that will achieve, or we're targeting to achieve, the same efficiency or even better at a much lower cost. So we are fully on track with that at this point, and yeah, looking very much forward to deploy this in the midsize platform as a first vehicle.
Great. Thank you, Mark.
One moment for our next question. And that will come from the line of James Picariello with BNP Paribas. Your line is open.
Hi, guys. This is Jake on for James. I was wondering if you could just quantify Gravity deliveries in the second quarter. And based on third-party data, which is admittedly unreliable for Lucid, there were no deliveries in July. So is there a hang-up, like a quality issue with the Gravity delivery ramp? And when should we expect to see material volumes?
Yeah. Well, let me address July first. That number is false. And that's all I want to say about that. It's totally false. But when it comes to number for second half, we're not disclosing this, but we're definitely in the process right now of ramping up Gravity. In the second half of this year, the Gravities will actually be the majority of our deliveries. But yeah, going back to the July number, we saw that as well. But yeah, it's unfortunate that something like this is published.
Yeah, thanks for clarifying on that. And then CapEx is an area where I think you guys have done a good job controlling your costs, keeping it under expectations. But even the revised guide, it looks like you're implying spending will more than double in the second half. So could you just talk through some of the puts and takes there? Thank you.
Well, I mean, as you can imagine, I mean, when it comes to the CapEx spend, it's not a linear exercise. So, I mean, between the moment you place your POs, you finalize all the blueprints and so forth, I mean, there's a lag of time. So this is why, I mean, we see a CapEx which is backloaded. So most of the spend will be related to our AMP2 facility in KSA. So again, it's not a linear spend. What we have tried to do is to have a critical look at all the CapEx spend proposal and make sure that we only spend where it deserves to be spent with the highest probability of return and the highest level of return, hence the revised guidance that we have provided. But again, yes, I mean, most of the spend will happen in the second half of the year.
Thanks, guys.
Thank you. As a reminder, if you would like to ask a question, please press star 11. Our next question will come from the line of Tobias Beith with Rothschild. Your line is open.
Hi. Good evening, Mark and Taoufiq. I hope you're both well, and thanks for your time. I have 3 questions, if that's okay. 2 are for Mark and 1 for Taoufiq, and I'll ask them separately. Mark, in your prepared remarks, you cited the supply of magnets as constraining production, but output in the second quarter was at an all-time high and also above demand. And I also understand that Gravity and the Air use the same amount of magnets. So I'm slightly confused, and I was wondering if I can ask for further details on that topic, or if you can tell me what I've missed.
Yeah. Well, first of all, that problem is behind us. So we solved that problem in Q2. Second half of the year, we have secured enough magnets, so we have no problem with that anymore. When it comes to your second part, that the Gravity and the Air use the same magnets, that's actually not exactly true. Because what happens is that from each model year and from each model, we have minor changes in the chemical setup of the magnets and those kind of things. So that is not really correct. Yeah? So we had a shortfall for a certain trim, and we were able to overcome this with some magic, I would call it, that our engineering teams then were able to do. So we actually didn't miss production due to that in Q2. And yeah, that helped us over that hump.
Okay, I think I understand. Second question for Mark. About 2 years ago, I asked your predecessor to detail the timeline and the required milestones from then to starting production of the Gravity to help me judge progress from the outside. I was wondering if you could please do the same for the Atlas powertrain and the first model based on the midsize platform.
Yeah, I mean, right now, one key thing that we're doing is basically we're in sourcing right now, and basically what I'm saying right now applies to the Atlas powertrain, but also to the midsize. So there's not really a difference because both of them will come at the same time. Then sourcing is important because we are sourcing right now for the so-called PV builds, which is the product validation builds. So all of the engineering work will be very quickly be finalized. And then from there, we go into a validation phase with all kinds of testing, including winter testing later in the year, and then homologation. So those are the things that are following. I guess the background of the question is, are we on track with what we planned, to start the production of the midsize in the end of 2026? And the answer to that, this is our current plan, has not changed.
Thanks for that. Taoufiq, final question from me. How much of the step up in the write-downs on inventories and losses on firm purchase commitments is attributable to tariffs versus building raw inventory to aid the ramp-up of the Gravity?
Yeah. So again, first of all, yes, there is an impact on inventory adjustment on inventory for the next 6 months commitment of purchases. It's as far as we see it, I mean, an event which will hit primarily Q2 because for the subsequent quarters, I mean, we will need to do a reversal, which will offset the new provision that we will book, provided that we maintain roughly an equivalent volume of procurement. So knowing that we have acquired and we did an increase in our inventory in Q2, we should expect the volumes to remain roughly stable in Q3 and Q4, and therefore it will not arise any incremental impairment that we might have to book. So we have stated that the tariffs, the impact from the tariffs in Q2 was amounting to roughly $55 million. So this is actually a net figure which is made of three different amounts. The first one is the actual tariff impact, which is in the range of $55 million. Then there's the impairment that we book only in Q2. And then there's a netting effect coming from the reimbursements that we're getting, the famous 3.75% that we're getting. So all this leading to a net $55+ million for the quarter.
Okay. So just some crystal clear, right? The 21 points of tariff impact, not all of it was actually realized in the second quarter, and you're still expecting some reimbursements to come later in the year. So actually the impact on the second quarter was more than 21%.
So no. I mean, we will have reimbursement, so this will continue. It's a flat percentage, which is function of the localization of the procurement activity and the volume. So this will continue until the end of the year. The only difference that will not happen, or the only element which will not happen or will not have an impact on our financial for the balance of the year is the booking of the impairment of the inventory, because this will be netted off between reversal and provision that we book. So that's why when you look at the statement that we have, or the guidance that we have given, we are saying that the tariff impact on a full year basis will be on the lower end of what we have provided. So we said 8 to 15% on a full year basis. We have 21% in Q2, primarily because we had to book the first impairment on inventories. That will not happen for the subsequent quarters.
Okay, understood. Really appreciate the detail from both of you. Thanks for your time.
Pleasure.
Thank you. I'm showing no further questions in the queue at this time. This concludes Lucid's second quarter of 2025 earnings conference call. Thank you all for joining us today, and you may now disconnect.
I don't know what to say. For one, they didn't do any they didn't do any closing remarks. Fuck me. Pardon my French. So, I'll give you a quick summary of it. That was not good. That one of the analysts was probably were in Starbucks. Like, you had a lot of the big names. Bank of America didn't even bother to join, even though you did have John Murphy step down, so it's a new analyst, but they didn't even care to show up. Morgan Stanley didn't even care to show up. And that, on a side note, was honestly, even though they were bearish initially, they're one of the bullish ratings. So anticipate most likely a lot of $1 to $1.50 ratings, most likely over the next couple of trading days. Couple highlights though. So this individual, which I personally am not really a big fan of, so this individual being Tim or Timmy, whatever his name is, as a brand ambassador, that's going to be starting early September 2025. And his plan and I guess goal is to help push the Gravity. So that's one thing that they mentioned. This is one thing that has really bothered me. Every single earnings, pretty much since, was it 2023 when they started to do this, I've really stressed the importance of these questions. This one, there was 5.1 million shares represented in this question about the reverse stock split. That is a complete waste. And the fact that 2,500 votes was done on that, that's insane. But we do have some clarity. They said if, but they already, the fact that they already know when they're going to be doing it, just so on an FYI, they have the reverse stock split in their back pocket. So with the PIF having majority stake, they're going to get their blessing beforehand. And they pretty much, if the PIF votes in favor, I don't really care what anyone says, that there's still a chance. I've seen some people online saying, hey, vote no, which normally I am a kind of more oriented towards the no, but if every single retail, every single institution votes no, if the PIF votes yes, then it's a reverse stock split. So they're going to be doing it early September, as what they mentioned. This one they didn't even bother answering, so another 4.6 million shares wasted. Honestly, I think they should just get rid of this, because this goes to show the level of complexity that retail investors bring to the table. And to be fully honest, a lot of the analyst questions, even though most now aren't really caring about Lucid, Tobias seems to be the only one actually knowing about Lucid's business and asking questions. Everyone else is busy ordering Starbucks, saying good job, good earnings, and then asking about APS for the midsize. It is just absolute insanity. So this earnings, if I was to give it a rating out of 10, like a solid 3, this was bad. This was very, very bad. Anyone saying otherwise, this is gonna be And normally I always like to give you the good, the bad, and the ugly. There was no real concrete something to hang on to. So tariffs are a big deal, and clearly they did previously cite between 8 to 15. Technically that's not true. They mentioned 8 to 12, but whatever, if they want to say 15 now, then whatever. But it is on the low end, works out to be $55 million worth, and technically they didn't really bring that up, but tariffs placed on Canada did recently go up. So again, that's going to potentially cause it to go higher. So I don't understand why he said that they're guiding for the low end of 8% when tariffs just increased in Q3. So that's didn't really jive, didn't really make all that much sense. They kind of alluded to other partners, potential partners, but honestly, they've said that even under Peter. So honestly, this is kind of the boy who cries wolf type of scenario. They'll continue, for the next probably 10 quarters, they'll say that they have potential partners. So that doesn't really make that big of a deal in reality. magnets seem to be a big thing. So after this, later today, when I have a little bit of time, I'm going to re-listen to, I have it posted on this channel, but in September 2024, Peter did a tech day, and that was a 2-hour live stream. Amazing stuff. And I believe Peter did mention in that Air and Gravity uses the same magnets. That's what 𝗖𝗎𝗧 did believe. But Mark is saying otherwise, that potentially Air and Gravity use different magnets, and this is why it just didn't jive. On a positive note, I guess they actually did fully do some deliveries in Q2 of the Gravity and sales. They did also mention in Q3, majority of the sales are actually going to be the Gravity. So that's a good thing, shows that something is happening behind the scenes. I kind of wrote a note. I don't know if anyone actually saw or read this, more out of a comedy type of thing, but where did I write it? Right here. So when they were talking, well, actually I was there anyways, but on the Gravity, the magnets, Mark mentioned twice that they magically were able to do that. So I wrote down Harry Potter and magic saved them. So I don't understand, for being a tech player, right? They don't want to just be automotive. They're a tech company. That's what they're trying to portray themselves as. I don't think any CEO, Alex Karp or whatever, would say, hey, we magically fixed a problem. Like Harry Potter, did you guys hire Harry Potter? It does not make sense. You don't just say, hey, we magically fixed it. No, you should actually answer the damn question in a concrete professional format. I don't think any CEO I've ever heard that's of a credible company say, hey, we magically solved a problem. It's like, what the hell does magic mean? Like, I don't know. That one stood out to me. But yeah, in all honesty, one thing that I don't think they actually read their PRs that well, because there was two things that came out in regards to Graphite One. They did an initial news PR saying that they partnered with Graphite One, and then they did a second one, I think it was a week later, saying that they filled all the paperwork and they're going to expedite this process. Because technically, I did some research for this whole Graphite One scenario that was going to take most likely 2 years. With this expedited process, it'll ramp it up and move it to 6 months. So good stuff. But Mark mentioned 2028. So I'll wait until the transcripts actually do come out just to confirm that. But that one, I had a very big question mark because it didn't make sense with their previous PRs. But again, moral of the story is, I think just from this earnings, it was not done correctly. Like, there was just analysts felt like they were being paid to be there. And most likely they were. They're being paid very well just to ask a stupid question. But to be fully fair, a lot of retail asked a lot of stupid questions. I'm sure a lot of them have tons of millions of shares. So I think in reality, it's not good. And I think what I might do, on a side note, I did reach out to Lucid and I asked for an interview. Because I feel like, yes, I am a Lucid investor. I like it. I have a dedicated channel, but I like to get to the real bare bones. So I feel like I would ask some pretty good, concrete questions. And unfortunately, they said they don't do any interviews with any YouTubers, but they only stick to Bloomberg and kind of media sources like that. So maybe I'll try again for the next earnings and say, hey, can I be counted as an analyst? Because I've seen even Palantir and also Robinhood recently. For those of you that are on Twitter and YouTube, there's this guy named 𝗖𝗎𝗓, who is a YouTuber. He's not with any firm. He's not an analyst. He was able to ask questions at Palantir and also Robinhood's earnings. So why the hell not at a Lucid earnings? Like, because technically my main questions are, yes, you're talking about bottlenecks and everything, but you basically mentioned the guy who did the drive-through at Starbucks, who, whatever he was ordering, he asked about the touring. His second question was, what about the Gravity touring? When is that going to come out? So ultimately, Mark mentioned, I think it was Mark, in Q1 2026. So potentially, that is going to cause a lag, if you think about it, because they mentioned 2026 are going to be full on force in prioritizing midsize. Well, that doesn't make sense with your comments, because technically if you're going to be ramping up on the Touring, which is going to be, in theory, the better selling model, because it's going to be a 79.9 versus whatever, I can't remember exactly what the GT is selling at. I think it's 109 if I remember correctly, or 93 or something. But nonetheless, the Touring is going to be the better selling of the two. So I feel like I feel like this was like a school report, and they just did it yesterday. They rushed this. They did not sound confident, and that's, yeah. So shorts, I'm very interested to see what shorts do tomorrow. Today they increased just shy of 15 million shares, so tomorrow should be a very interesting time. Probably a lot of new analyst ratings, which the CFO did mention about the whole reverse stock split and why they're doing it and why it's in Lucid's best interest. None of which, zero. I did not believe a single word of what that individual said. And honestly, that's a bad thing about having a lot of retail, is because they'll believe comments. If someone says, hey, you know what, we're doing it because of this, some people will be like, sure, okay, sounds good. But technically, just so I know I've mentioned this in videos, but some of you might not watch my videos, but just so you're clear, right now Lucid is considered a penny stock. Any stock below $5 is considered a penny stock. Sorry about that. So what they're doing in theory is to do a reverse stock split and get it out of the penny stock status. And then technically, in their eyes, because of that, now you're going to have institutions buying it. So when a stock is penny stock status, institutions can't buy it with margin, and usually pension funds, depending on kind of their stipulations, they can't buy it. But Lucid is doing a reverse stock split so institutions can buy it on margin. That makes no sense. So I don't know what they are expecting. Maybe they assume BlackRock is just going to go full on in max margin on Lucid and just pretty much buy it out. I don't know if that's their plan. It just doesn't make logical sense. And whenever a company is saying something that doesn't make sense, usually shows that they're trying to hide something. That's just me playing devil's advocate. So yeah, that's definitely not accurate. And at the end of the day, if an institution is not buying Lucid, it doesn't matter if it's penny stock or not, it's going to come down to performance. And based on this and what they mentioned about ramping up throughout 2027 of the midsize, that shows that analysts are actually accurate when I was doing this video. So they assume that profitability will occur most likely in roughly, 2030 for the most part, 2029 transitioning to 2030. So you pretty much have dilution from now until then, which is very unfortunate at the end of the day. So yeah, it is what it is. I know everything I do typically bring up, and even everything that happened right now, is kind of just short-term type of stuff. If you believe in a bigger picture, then so be it and have at it. I know Lucid definitely is a long-term investment, but it is very frustrating every quarter to hear pretty much the same thing over and over. Yeah. So yeah, that's my 2 cents. I know some people might disagree, and just for clarity, because I saw some people say this, I'm not short. I always like to give you the good, the bad, and the ugly. No matter what stock I ever talk about, I would never ever want someone to say, "Hey, Cal, you did not say this. You neglected this, blah blah blah." So yeah, I think yeah, it is what it is. So hopefully I touched on a lot of the main points, but yeah, magnets, I didn't think that was going to be a bingo word for this earnings. So this individual is going to be early September 2025, going to be pushed in the Gravity, which does coincide with the same time frame of them doing a reverse stock split. So just so you know, August the 18th, that is the date of the shareholder meeting, and if it is approved, wink wink, then technically it'll be early September. Lucid, just so you're aware, does have to give 2 business days notice to investors. So you'll see a news, or like a PR probably, and also an 8K late August, just saying, hey, we're going to be doing a reverse stock split this date, a 1-for-10. So yeah, it's not great. So margins definitely is something to be cautious over. And then, yeah, let's see. Let's take a look at the chat. What's up, 𝗪𝗧𝗡𝗡𝗘𝗖𝗧? Fabian. Yeah, I would love to, even if it's not with Mark, it doesn't really matter. Like, I would prefer one of the lower end executives, because then I feel like a lot of those kind of mid-level ones are the most truthful, and they actually know the fundamental like in and outs of Lucid. So I would rather interview like Faisal, or even what's his name, Michael Cruz, for instance, or Mike Cruz. A lot of those individuals, like, you can actually like get a full-on grasp of what Lucid is doing. Mark clearly outright to Bloomberg just lied, and he mentioned that there's big announcements coming for stay tuned for the earnings. Well, we just had the earnings, and I'm not really surprised. I'm not blown away. So yeah, if he's willing to go on Bloomberg and say that, I'd rather interview one of the lower end individuals. Yeah, I saw that out of spec. I don't know who I need to speak to about doing that. Yeah. But yeah, I think even Kai, Social Lust, I think in general, like, you need someone. And the funny thing is, going back over to this individual about this brand ambassador, not to hate on this guy. I know a lot of people seem to really like him. I personally didn't really know much about him, but all I know is his fan page said, hey, they put out the news about him partnering with Lucid and is the global brand ambassador, but they even said on their initial post, too bad it's too expensive. Like, this guy does not have the target audience. Like, he'll get Lucid's name potentially out there, but not to a audience that can actually buy a Lucid. So you need to really shake things up, and this isn't the way. This definitely isn't the way. But that's unpopular opinion. I know a lot of people seem to like this news, but this, in my opinion, is going to result in sales. And they even mentioned they're going to help push the Gravity. That's what his plan is, and lay the foundation for the midsize to be a success. So, of course, I think the touring, so the Gravity touring is going to be that foundation base, most likely. But yeah. UPG7, what's their profitability plan for 2030? Peter's been the only individual to ever talk about profitability, and he mentioned it's going to be with the midsize. So far, Mark and the word profitability haven't been aligned, so it's anyone's guess, I think. Oh yeah, Fabian, I'm glad you actually brought that up. So technically, sorry, I guess that was I know I made a note of that, but the Uber partner, that is going to be technically in early 2026. So don't anticipate anything from Uber until right here. So they mentioned, okay, I'll have to double check the transcripts, so don't quote me, but I wrote down clearly at the time, late 2026 launching. I don't know if for those of you that remember that, but yeah, so technically, as I've mentioned, when this whole news did come out, it's very weird the fact that Lucid actually did write down on the actual PR that this is going to benefit and be incorporated in the Gravity, but if it is late 2026, then that means it's midsize, because it's Uber. Why is Uber going to be spending $100,000 on a vehicle? They're going to be doing the midsize. So we got news that pretty much won't be in force up until like a good year and a half from now, which isn't that great. But yeah, that's the quick Cole's notes Yeah, so moral of the story is magnets. Magnets, Harry Potter saved the gravity. If not, without those damn magnets, there would be zero gravity sales in Q2. So thank Harry Potter, thank magic, and be careful over tariffs. That's kind of the moral of the story of everything. Roger M, I think Cal wants a Tesla to stock pump. No, I definitely don't. Yeah, the Odd Society, yeah. What's her name? Kylie Jenner. Yeah, definitely. That's a huge reach. That could be good. So yeah, will be fun to see exactly the price action for tomorrow. Just so you are all aware, it is down 9.09%. So most likely the next support is going to be that 207. And in my opinion, that will be touched most likely tomorrow. Whether it breaks and stays below that, I don't really think so, logically, but at least in my opinion, I think that might be touched. But yeah, this is the fun part of being a Lucid investor. Probably by profitability, my hair will be gray by covering Lucid, but that's why they have Just for Men. So yeah, everyone have a good day, good rest of the night. I'll do a quick pre-market kind of full-on review of all this. And hopefully Mark does some interviews that we can actually maybe have some follow-up from on Bloomberg. But yeah, let me know your guys' thoughts. Appreciate all you guys watching. Don't forget to hit that thumbs up, and you guys have a good rest of the